Hey traders, Raghee here, and in this free recap video we're going to talk about the move the market made today and a couple events on the horizon, some scheduled, some not, that could continue this somewhat bullish follow through, or whether or not this market actually exhausts within the zone of correction, starts heading lower. So let's talk about what we have right now. Friday, the perception that we had a dovish Powell basically sent the market higher, and then now I'd say the markets are probably getting a little bit of follow through from that rally on Friday, and also the idea that we could see some progress made on the US-China trade war front, as there are folks meeting in Beijing regarding the trade war. We do have an event tomorrow where the president will be speaking at 9 p.m. Eastern. Expectations are that conversation is going to be about using an executive order to an emergency, national emergency, to build the wall. Now, gang, I don't want to inject politics into the trades, but think about what that would mean then to maybe shorten the government shutdown and the perception the market would have, where the wall and the government shutdown become two separate issues, right? Now, I don't think this is going to go over well. I don't think it's going to go easy, and folks really aren't 100% sure that the president can do it. But how is the market going to respond to this event? What kind of volatility are we likely to see it tomorrow at 9 p.m.? That's the question, right? So it's really difficult oftentimes to separate politics from our trades, but we must. We look at all these events as potential volatility events. Same with Beijing, same with the speech that's expected to be delivered at 9 p.m. tomorrow, same with the government shutdown narrative, all of it. So what we've done is we've corrected with a fairly violent bear market bounce. I do believe this is a bear market, or at very least a downtrend. So what we've done is we've corrected into the wave, the 34 EMA wave, which is the 34 EMA on the high, the close, and the low, which are the green, yellow, and red lines on this chart. And by bouncing up into the lower level, this is a short for me that I will typically look at one of two ways, either with a small number of ES contracts or a small number of SPY shares, or with puts on the futures or the ETF. And that brings up a really good point. If you're trading futures, there are a number of ways you can trade futures. You can trade futures via the underlying. You could trade futures via their options. You can also look at the ETF alternative and trade that, or the alternative ETF's futures. Options. So there's a lot of choices you have here when you're looking at the touchstone market, which is here, the ES, but then where it could take you for an alternative entry. Now, in the red zone, the first level, or what I call the aggro zone of an entry, where the risk reward is the least desirable, meaning the risk is greater, but it is the first opportunity to short, right? How do you engage? By realizing that entry risk, or how much you trade, how much size, and what asset class additionally you might use is highly predicated, is super correlated to the stop loss. What that means is then, if you know your entry risk is, and your sizing needs to be in relation to the stop loss, you need to look at where the trade is no longer valid. Now, for me, this trade is valid as long as we stay below 2620. And for a lot of traders, that distance is unacceptable. But let me also remind everybody that we've taken trades from 2800 down to 2620, or we're taking trades from about 2700 down to 2500. So the risk reward does differ. You know, I'm not looking to risk, say, 70 points to make any less than 70 points. But whether or not the trade is affordable is a different conversation. And that really is, I think, a very important point to anyone whose trades you're following and which time frames they like to trade, and also which time frames you might be best suited for. Everyone's risk tolerance muscle is different. Some people like to go into the gym and move a lot of heavy weight around for low reps. Some people like to go into the gym and pick up a light weight and do a lot of reps with it. That's kind of the way trading oftentimes is. And if you want to grab a light weight and do a lot of reps, that typically is going to equate to a 60-minute or less time frame, maybe even a 5, 3, or a 1 minute time frame. So make sure you're lifting the weights that are in line with your risk tolerance. But keep an eye on basically the risk picture this week. A lot of chatter could be coming out of the meetings in Beijing. Who knows what the government shutdown situation will be like when we hear from the president tomorrow at 9 p.m. Eastern. And we'll continue on with moving closer and closer to the kickoff for earnings season when we get the financials coming out. All right. So just kind of where we are. We don't want to get too active on a Monday, just like we don't want to get too active on a Friday, but we are at some initial levels that we're starting to build scale into these shorts. Okay. I'll see you in the next update.